Hey, what's going on YouTube? Welcome to the video. So today I'm going to be talking about one of my favorite tools I like to use when I day trade, specifically for scalping, which is liquidity pools, right? So we're going to be starting again on the Twitter. So I'm going to be going through three tweets that I've tweeted between 2022 and 2023, all about liquidity and different reasons why I like and why I think it's such a great tool to use for scalping. Right. So the first one is going to be a tweet from November 13th, 2022. And it says that you don't have to be in a trade to feel like a trader, right? That's one of the things a lot of traders deal with, especially starting out when they're new, is feeling that, okay, if I'm not in a trade, then, I'm not doing anything, and I'm not making money. And that's a misconception that takes a little bit of experience to understand because half of the time when you're not in a trade and you're protecting your capital, you're actually doing exactly what you need to do, right? So, I pretty much say that you got to disconnect from that concept, and a key part of your job is to screen out the low quality trades, right? And sit on the sidelines for those and wait for liquidity to build up so you can take it, right? The second tweet talks about how the end of the day, right, when you're trading, the market has to create liquidity, it has to take liquidity, and then it has to deliver liquidity, right? And that's how you make money, right? There's big banks, there's big institutions that are pretty much waiting to put on massive orders, and in order for them to fill those orders, right, they need liquidity, right? That's why you have to let it build, and you have to be able to identify it. And then once you're in the trade, you have to be able to deliver into it so you can get out and make money. And then the third tweet is pretty simple, and it's one of my favorite concepts or sayings about liquidity is that you either wait for liquidity or you will be the liquidity. So I made a quick PowerPoint just kind of breaking down what liquidity is, how to find it, and how to use it to make some money. So we're gonna jump into that right now. So let me pull up the PowerPoint. So this is the first time I'm using a PowerPoint. So let me know what you guys think. Let me know if you if I should continue doing PowerPoints, and you feel like you gained something from it. So let's jump right into this. Cool. So liquidity. So pretty much finding liquidity pools in Forex, right? So this presentation is going to be about liquidity, how I like to find it in the markets and how I use it to my advantage when I take trades. So what are liquidity pools? So liquidity pools pretty much are places in the market where you have a lot of resting orders, right? Whether that be stop losses, buy stops, sell stops, limit orders, buy limits or sell limits. It's a place where there's a lot of volume and there's orders there. So the benefits to finding liquidity pools is there are a few, right? One, you get to get filled at a better price, right? So if you place a big order, if there's not a lot of liquidity in the market when the price comes to that point, it may not fully fill in your order and you may not have as much risk that you want on the table. Another benefit is that liquidity pools are points in the market that are very sensitive. So you'll see price react to those spots very what's the word? Like very sharply, very aggressively. And that helps when you place a trade so that you don't get like chopped around, you're not in consolidation. The move ends up going quickly. Um and there's a few other benefits here, but you guys can read those. So how do I find liquidity pools, right? So the first thing I like to ask myself when I'm thinking about liquidity is where are stop losses or take profits placed, right? So wherever on the chart those two things are placed, you're gonna most likely see like some liquidity. One of those situations would be a swing high or a swing low. Another situation would be a session high or session low, right? Whether that's Asian session, London session, or New York session. You also have daily highs and daily lows, and weekly highs and weekly lows as potential liquidity pools. So this is a chart example showing a liquidity pool from the London session, right? London session high. So right here where my arrow is, we had London session put in a high, and there's liquidity up here. And there's also liquidity down here at London session lows, right? So London opens from 3 a.m. It opens in 3 a.m., which is 8 a.m. In England, and it closes at 12 p.m. Eastern time. But for our purposes, we're going to be looking at London session at 3 a.m. to 8 a.m. Because after 8 a.m., New York opens, and it's technically a crossover session. So then another example of a liquidity pool would be a swing high, right? So here we had a swing high put in during London session, and we had liquidity resting up here. That's why when the price came up here, it did a liquidity sweep. It took this liquidity and had an aggressive move to the downside, right? So when I look at the charts, that's something I'm looking for because those tend to be high probability setups that I like to take. So now we're going to move on to the charts, and I'm actually going to do a live example showing pretty much liquidity and showing you how I would use it in a live situation. This is back testing, but it'll still give you a good idea of what it looks like. So, so we're gonna play this forward, and this price action I haven't seen it before, so I'm not sure what the market's gonna do, but we're gonna see if we can take a trade and catch a winner. So right now, price is kind of moving sideways, and we have some liquidity up here, which would be London session highs, and you can see it just actually tapped into that area and took some liquidity. And we also have liquidity over here beneath these lows as well. So now we're just waiting to see if we get an entry signal. And we are going to take this trade right here. We're going to put our stops beneath this low right here. And we're going to target some liquidity up here. Great. Nice and simple. And we're going to risk, say, 3%. And we're going to see what happens. Price is moving up. It's moving towards that liquidity. And it tagged us out. So trade ended up being a loser, but that is pretty much the idea. Um, and yeah, hope you gain some value from this video, and hope you can start to use liquidity when you take trades. And yeah, peace out.